Welcome, everybody. I am back with my partner Sean and Kyle this evening, and we got a case study for you today. I'm super excited about this. Kyle, Sean, how you guys doing today?
What is going on? How's everybody doing?
Yeah, how's everybody doing today?
We are doing great. So, before we jump in here, for everybody that is tuning in, do me a favor, like, share, tell everybody you know that owns a business to jump in here with us because we just want to walk through how people become the overnight success. And it might not be overnight as in what you may think of overnight, but
Mhm.
how you take a 20-year, no, not even 20-year, 10-year journey to being a $1 billion company. And so we're going to talk about that tonight. I just want my Facebook family to tune in with us and we're going to rock and roll. So let's talk about Figma. Figma IPO today. I want to give just a little bit of background. Figma completed one of 2025's most significant tech IPOs today,
Mm.
raising 1.2 billion at a $33 price per share point and achieving a $19.3 billion valuation. Then the stock more than tripled on its New York Stock Exchange debut, opening at $85 and closing at $115.50 for a 250% gain, giving the company a market cap of almost $68 billion. So I want to pause right there because it's some happy people today. It's some happy people. If you don't understand anything that I just said, Kyle, Sean, one of you guys tell me because I have an interesting question here. They raised 1.2 billion at $33 per share, achieving 19.3 billion valuation. And then they went to the stock exchange and it went up even further. So does the IPO take place before you hit the stock exchange?
Well, the IPO is the initial public offering, so it's the first offering to the public
How would the public see it? Through your regular trading platforms?
through broker dealers.
Yeah.
Okay.
And you know what, real quick too, because what's so great about this is that Tyrus, I think you working with us now, the light bulb went off. I'm looking at you right now, and your eyes are wide open. So so as I'm looking at you, I'm beaming with joy and everything because I'm like, today Tyrus gets it because your eyes are open like that. So I'm like, I'm sitting up here bubbling because you literally see how wealth is created. And I believe not only have you seen it, we were talking about it for months, but today the light bulb went off. And now you can see why Sean and I are talking about why don't more companies go public. So
Yeah.
I just wanted to get that out there because I'm looking at you and I can see when you know when somebody gets it and you know when they got that aha moment.
I've been sitting on Russell Brunson's Selling Online Challenge. And every time he goes through the information, he goes and he says, what's your aha moment? What's your aha moment? What's your aha moment? I'm sitting here realizing as I did the backstory, and we'll get a little bit deeper into the backstory of Figma, they went from zero to
Mhm.
IPO. We call it 13 years. Some people work 40, 50, 60 years and then they try to rely on Social Security and it's not enough. Some people side hustle themselves to death and it's not enough. Some people work until they get to retirement and they're going to enjoy life and then they pass away. But you have some people take 13 years and become billionaires.
Mhm.
Now, Figma was founded in 2012. The original owner or the founders, Dylan Field and Evan Wallace, two computer scientists, they went to Brown. Field received the prestigious Thiel Fellowship, a $100,000 grant that required him to leave college and focus full time on building a company. They paid him to leave, y'all. They paid him to leave. They spent 4 years of intensive product development. So from 2012 to 2016. They did a beta launch in 2015, went to the public in 2016. 2021, they launched a Fig Jam collaborative whiteboarding tool. Now, here's what's interesting to me. And I want to break down and we'll just talk about the rounds. In 2013, they raised $3.8 million at 9 cents per share.
Wow.
9 cents per share. That was a $16 million valuation. 2015, 2 years later, they did a Series A.
Real quick, does it say
Go
what
forward.
instrument? Does it say what instrument they used?
It does not say what instrument on here.
Okay, so just say they raised it. Okay.
December 15th or 2015, they did a Series A. They raised 14 million at 20 cents per share. So the value increased a little bit. They raised at 9, they went to 20. 3 years later, 2018, they raised 25 million at 33 cents per share. 2019, 40 million at $1.10 per share. Man, all these folks is rich. 50 million in 2020 at 4.62 cents a share. And then they did a Series E in June of 2021. That went up to $21.30 a share. And then they did a Series F where they raised 4.6 million. No, 416 million. Now, when they IPO'd, and Sean, I've heard you talk about this before. They IPO'd at $33 per share. But the roadshow launch was $25 to $28 price range. Can you explain to us what a roadshow is?
Yeah. So what a roadshow is when the CEO goes out and talks to different broker dealers, talk to different networks, and basically markets his company. All he's doing is marketing his company, letting them know they're coming.
Okay. The road show is what.
And real quick too, Tyrus. I
Yep.
remember I was when I experienced my first road show. We had, I was working at a broker dealer. We had gathered in a conference room, and the CEO and the CFO, I want to say, they both got on the phone and basically was telling us about the company, why we should support the stock, what they have going on, what they're expecting the stock to be at, and all of this stuff, And it's pretty cool because it gives you an idea of what's coming down the line, and it's not a matter of when, because they are ready and they are ready to do initial public offer and do an IPO. So.
Mm-hmm. So a roadshow is essentially, like you said, marketing your business, selling your company to people, getting them to buy into the vision.
Yep.
And the traction and where you are and where you're going. I love it. So when and Kyle, I want you to talk to us about the IPO part of it. When they IPO'd at $33, those people that came in at 9 cents, that means I paid 9 cents per share when I came in. At the IPO, I could sell my shares to these people at $33 a share. I got that right.
That is correct. That is correct. So not only that, but what you're talking about, all those different series of rounds, all of those people that were buying, that all they did was they used that to raise capital. So when they raise capital, and this is what people need to understand, when you're raising capital, you build your company. So utilize that money to build your company. And that's just the reason why I tell you people end up on my favorite television show. Those are the people that go out and buy the boats and the cars and the stupid stuff and the parties and things like that. They're not building their company. Use that to get yourself talent. Use that to get yourself the servers that you need. Use that for your R&D, your research and development. What do we talk about? Mind your business. All of those things while they were doing it. I could just tell the way you were breaking it down. 9 cents. Doesn't that sound crazy? Selling shares $3 million and you raised $3.8 million off of 9 cents. Then it went up to 20 cents or whatever, something like that. But that's all they were doing. So the IPO, you've got to have basically what's called volume. You've got to be able to have that in the shares. Well, where are these people buying the shares from? From those people. That's what the pre-IPO is. That's where it comes from, and that creates your volume.
So just pulling information from the internet. You all can go fact check it that's listening. Index Ventures led in that round, that 9 cents. They held 62.57 million shares worth $5.3 billion at opening price.
Mm.
Other investors are set to see profits exceeding 1.4 billion. Three
Yeah,
firms each own double-digit percentage stakes, meaning they'll each return over $1 billion.
Yeah.
So we
I've
ain't even
read,
talking about
I've
the
read the,
overnight millionaire. We talking about the overnight billionaire.
yeah,
Yeah.
I've read the co-CEO or CFO or something like that. He owns 27 million shares.
That's
Evan,
what we're talking about.
he
That's what
owns
we're talking about.
27 million shares.
So think about it. What is that? The COO. So when we talk about, like Sean and I, we had a conversation the other day, and somebody said they authorized what they say. Remember, was it 200 million?
Yeah, 200 million. Yep.
So Sean and I were scratching our head. We're like what? Why would you authorize 200 million? How many shares do you have? What they only got 10 million or 15 million? I mean,
5 million. Yeah, yeah.
yeah, you need to have at least 20 some million shares. Why? I mean, what I had, 22 million shares. You're showing you have what, 22 million shares. You need that much because think about it. If what did it come out at? $85?
On the, yeah.
You got 22 million shares at $85. You do the math.
So Dylan Phil's stake is worth over 6 billion.
There you go.
He sold 2.35 million shares in the IPO for $62 million. So he just, it was like, oh, I'm worth 6 billion, but let me go ahead and drop 62 million worth and just have that in the bank.
Yeah. Yeah. What's so amazing about this time is that you are now breaking it down. That's what's so exciting. So Sean, we've given birth.
I know
We
how.
done created a monster. We don't give it birth because not only are you talking about it, but you comprehend it.
Yeah, starting to understand it.
You understand it.
I
And
see
now
it.
think about that. How many businesses do you know right now that basically they're making good money, but they're only making money based off of what they sell?
Right.
You know what I mean? So they're like, okay, well, if I just sell this, now to think about, I make this widget, I make this gadget, I make this whatever. My profit margin is this. I just got to sell a whole bunch of this, and I'll be okay. What if you raise capital so that you can make more widgets? What if you raise capital so that you can now create automation? What if you raise capital to now put you in multiple places, multiple locations? Now you can make that much more. You get other people to get involved with it. It's the American way. Because think about it. How many times Sean and I talk to somebody and they say, oh, well, you can put your money in a CD. Really?
Barely making more than inflation.
Right. Oh, I'll just invest in the S&P. Don't you realize the S&P at one time used to be an IPO? The money in the S&P has already been made. So all you looking to do is make what? If the S&P is doing what, 10 or 12%?
Yeah.
So you happy, you satisfied with putting your, and the only way you're gonna make money off of that is you gotta have money.
Yeah.
And so Figma itself in the IPO raised 411 million. Most of the proceeds going to selling shareholders, including VCs. The biggest selling shareholder was MCF Gift Fund, part of the Marion Community Foundation, which sold 13.4 million shares for $441 million.
Oh,
When you talk about, when I read it and I did the research because I know I wanted to talk about it tonight, early investors achieved 1,000x returns.
Yeah.
The IPO was 40 times oversubscribed, meaning the demand for shares was 40 times the number of shares available.
yeah. Yep.
So that's why they probably trended up on the New York Stock Exchange. They went from 33 IPO to 85 to 100, and then they stopped them.
Yeah.
Now, can
And,
one of
and
y'all?
real quick, Tyrus.
Yep, go for
And it's funny because we was just having this conversation with another guy, right? He was saying, "Well, we don't want any any sellers, and we don't want any." And I'm like, "What do you mean you don't want any sellers? Because that's what create the value. You need buyers and sellers. Now, you want more buyers than sellers, but you need the sellers because it keeps it's called a liquidity, right? It keeps the stock moving, So, but he was and it's funny because a lot of people don't understand that they think it's a bad thing for people to sell. Well, if there's no sellers, there's nobody, the buyers won't operate. It's just not stock laying around. You know what I mean? So that was a lot of people get confused on that.
Yeah.
another thing. And I heard somebody say this on Instagram. See, our Instagram influencers run the world. People listen to them like they the gospel.
Yep.
They was like, "Oh, I don't want to sell my company.
I
Oh,
don't
I
want
don't
to go
want to
public.
rate." I literally heard a guy bash another guy about raising money, saying, "I bootstrap my own thing. Don't nobody own nothing. I own it all."
Yeah.
So Dylan Phil, who we just talked about, billionaire now. He's a billionaire today.
Overnight, right?
Cashed out 60 something $1 million.
Yeah.
He owns 11%.
There you go.
How many shares do they have total? Do you know?
I didn't see a total number of shares. I want to say it was 600, estimated 600 something million.
600 million.
Yeah.
Okay.
But
So that's probably
again,
a billion authorized. That's
he
probably
owns
a billion authorized.
11%.
Yeah.
Yeah.
And for all the people that are so afraid of not having 100% of your own company, you will never reach the same heights.
Right.
It's just not, it's not possible. I don't know if you can sell your way to this.
You can't bootstrap your way to
Yeah.
$100 billion, $40
Yeah, you
billion,
can't-
50 billion.
Yeah, $85 shares. Open up at 85. You can't bootstrap that. There's no way in the world you could do that. It ain't even imaginable. You've got to. You need investors. You've got to have to like so that you've got to have buyers and sellers. This is what we call sizzle. That's the sizzle right there. You've got to have somebody who wants to buy it. Because think about it. Now this stock is going live. Everybody sees it on the New York Stock Exchange. Now all of a sudden people want to buy it. Well, guess what?
Yeah.
The real money has already been made.
It's already been made. Yep.
Slow down. Stop right there. Stop it.
Real
Stop
money's
it.
already been made. Yep.
Stop it. Stop. Because again, I love them. Let's go back to our influencers. They want to teach us to get in the market, buy other people's stocks. If you ain't buying Facebook, if you're not buying Figma, if you're not buying Tesla, if you're not buying this, not buying that, if you don't have this in your portfolio, you're missing out. Please break down what you guys are just saying about the real missing out.
Yeah. So basically, when Cal talks about the real money, right, and this is a very true statement. A lot of people don't know about it. A lot of people will buy, for example, let's say Microsoft at $100, right, and it goes to 150, and they're like, "Man, I made a killing on Microsoft." But the people who make the serious money, right, just like you said, Figma was at 9 cents.
Yeah.
9 cents to $30. That's a bigger spread. Imagine how many shares you can have at 9 cents compared to $30. Right?
Right. So think
Kyle.
about this. Think about this. Somebody, they come out and say, okay, you know what? All right, it's at 9 cents. Let me use you for example. Tyrus, somebody comes to you, has a great idea, XYZ company. And say, okay, we're selling shares right now. It's 9 cents a share. How many shares you want?
I want $100,000 worth.
Okay, so you just want 100,000. So now how much is that? So let's take a look. So 9 cents
So 1900 something like
times
that.
what? Yeah, times 100,000.
Yeah.
So right, so you just paid $9,000.
Is it
So now,
9,000? Okay.
yeah, so look at that. So now look what you just paid $9,000 for what? For
100,000
a
shares.
hundred
Hundred
thousand
thousand
shares.
shares. Yeah.
Now, and then it comes out today at how much?
33.
33. So watch this. You got 100,000
Well, it
shares.
maxed out at what? 100 and something, right?
112.
I'm gonna tell you this right now. I know you wasn't staying in that long. If it came out, if it came, no, what you might have did, you might have said, hold on, wait. I'm going now. Watch this. Just let's just say, for the sake of example, let's just say you sold. Well, you know what? I'm gonna sell half of them.
Yeah, okay.
So you got 100,000 shares. So you're gonna take 50,000 shares, and it came out at what? $85.
30 the 33.
How
Oh,
much?
you're talking about before it hit the market or when it
Yeah,
IPO?
yeah. You want an IPO?
$33.
$32. Okay, times 33. So you know right now it came out at 33 equals. Yeah, but you just made
How much?
1.5.
$1.6 million. How much did you spend?
9,000.
$9,000.
Millionaire overnight.
That's where the real money is made. That you only sold half your shares. You still got the other half. You only sold 50,000 because you want to see which way this is going to go. It don't matter. If it goes up, you win. Guess what? Tyrus, if it goes down, you
I
win.
won. I put
You-
9,000 in.
Exactly. You win either way. That's
If,
where the real money's made.
if you would have sold it at 100, you would have made 5,000 more.
Yeah.
So how much did he make in the first one?
He sold, let's say if he bought at 9 cents, he got 100,000 shares, and let's just say he sold 50,000 of the shares.
Yeah,
When?
1.6, right?
Yeah, $1.65
So he
million.
would have made 6,600,000 off a $9,000 investment.
Yeah,
Changing investment there.
right. Now think about it.
Life changing investment.
You still got the other 50,000 sitting there.
Yeah.
Now you watch it. Now you sit back. Now you're just looking at the stock. You got it on your computer. Hey, let me know when it goes up. So guess what happens? Your computer's dinging, ding, ding, ding. Every time it's going up, your computer's dinging, and you're like, okay, well, let's see what happens. How I want to go. You want to talk about reading the candles? That's when you read the candles, because it got up as high as what you sold at 30. What was it? Came out at 35, but it went up to what? 100.
It went up to 112.
So, and you know you're not going to sell at the right time, but let's just say you let it get up to 100. You just made that much more, $70 more per share than what you made before. That's crazy. But what is really crazy is that when Sean and I try to explain this to people, for some reason they don't comprehend.
Yeah.
I don't know if they don't comprehend or they don't believe that their vision is big enough for that to be possible. And I like what you and Sean do because you never guarantee a price. Nobody does. But you don't have to go at $33. You can go at 10. You can go at 5. If you're starting low, you work your way up. And I would venture to say there's pretty much a publicly traded company in almost every industry, at least one.
Yeah.
So what you're doing as a business owner, you likely can become publicly traded and make some real money. If you have the vision, the will, and the push and drive to go.
That's exactly it.
I have another question because I'm trying to break it all down in my mind. How long after from that initial, Chandler said, oh, welcome, Chandler. Thank you for dropping in. Mark Cuban sold his shares at the right time and became a billionaire.
Billionaire.
Right.
Broadband.com. That's exactly right.
The right time. Question for the audience listening. If I IPO'd, we know that's road shows, broker dealers, shopping. $33. How long does it take from that moment till they start trading to the public and it jumps to that 85 on the New York Stock Exchange?
It just depends. It depends, I mean, um, again, if you're getting more buyers than sellers, then the stock is going to jump. Remember, how many companies were selling their stock at the IPO as well? I mean, excuse me, how many companies were selling their shares at the IPO as well?
Yeah, there was several
I
other
guess they're
So there
telling
was
VCs.
that.
all of these companies selling at the IPO. So now, people are doing, I'm sure press releases was out there. I'm sure there was all type of releases, and this is going to be the next best thing, and the hype and everything. The hype train was up behind it, and these people, regular people, started investing in it, thinking, man, if I can buy this at 33 and it go up to $50 or $40, I can make such and such percentage of my money. I could do pretty good.
Right.
Well, again, like Cal said, what about the people who came in at 9 cents?
Yeah,
They're not
nine
even
cents, 20
worried,
cents.
right? They're not worried about the stock going up. They're
Right.
just wherever it stops, that's where I'll get out at,
They
because
already
they're
won.
already at a profit.
Yeah, they already won. They already won. You had $33. So if you hold on to it, like I said, and you only and we just use it as an example, you only had 100,000. Suppose somebody put 20,000 in.
Yeah.
I mean, that's what 200,000, what 210,000, 220,000 shares. It's crazy. But think
And you
about
know,
what you do.
But
oh,
getting
go
back to
for it.
your question, Tyrus, it just depends on the activity,
Right.
how fast the stock price goes up.
Right.
Well, I guess my question was, when from the IPO is it released to the public? When the market opens?
Yeah, when the market opens, it'll be like, for example, if there's more buyers than sellers, a lot of times it may open up at 33, but it'll jump up maybe to 35 or 36 immediately. And then it'll just keep going. It just depends on, again, the buyers and the sellers. But
But
sometimes if you don't have the demand, the stock price may open up lower. But
Mm-hmm.
when they set that price at 33, they're setting it based on the buyers and sellers.
right. And again, you had like like 4 or 5 different, market makers. So you got those guys out there making the market. So they all set up to pushing and pushing and pushing, but they're opening up to their people. Hey, look, I got this hot stock coming out, $33. Hey, jump on it. Shoots all the way up to, like you said, what, 85. So yeah, but I mean, that's the sizzle. And it's going out there because even those people at the now think about this. This is what's really crazy, right? Those broker dealers, who are they taking this hot stock to?
That's a great question.
Their clientele, their investors. So guess what? So now they're going to say, hey, I got this hot thing. But guess what? Most people are not going to be offered this because they probably don't have 500,000 sitting in an account. So that's the reason why they wouldn't know about this, IPO, because they're not, a big hitter. Somebody's got, 500,000, 1 million, whatever, 3, 4 million. They're going to go to them to buy this. Those are the ones that are forced it to jump up. But the venture capitalists, people like us, we are the ones selling it at 9 cents.
Yeah.
We're the ones helping them get it up to speed so that they can now get picked up by a broker dealer. Because the broker dealer wasn't picking them up at 9 cents.
And we're helping out several companies right now, right? And I'll give you an example. Let's kind of give examples here. We have some companies that we're working with, right? And their shares are selling approximately 50 cents. So when they go public, guess what? If they go public, let's say they go public at $5, right? The people who are going to make the money is buying it right now at 50 cents, not the ones that's buying it at $5, because the $5 could easily drop down to $3. But the people, even though it's dropping, the people at 50 cents that's selling it, they're still making money. Even though the stock has dropped from 5 to 4 to 3, whatever, they still made their mony. Again, they're pretty much once that IPO prices and once it sells, once the price is kind of locked in, it's almost like they're in a no-lose situation there,
Right. And I just
Another
saw
thing,
JD put up there. I just saw JD put up there aftermarket 140. But look at that. Aftermarket, it's Friday. It's Friday. The market's closed. The market's not opening up till when?
But today, Thursday.
Oh, today's
tomorrow
Thursday. Okay.
morning,
Oh, tomorrow morning. There you go. So yeah, see, look at that. I'm a day ahead. I'm jacked up. But
Your
it's
day.
probably so yeah. So that means yeah. So
he
that
in
means
South Korea.
Our days
right,
blend together.
right. I'm like, but look at that. So they're opening up. I know it's like I forgot what day it is. So they're opening up to. It's already at 140 after market. Opened at 30. What 35? That
Yeah.
is, and you bought it at 9 cents. That is. That's the wealth. I mean, it's crazy. And guess what? We put these instruments together.
Put them together all the time. Yep.
So as a business owner and you're listening, I guess there's two plays to this, and I hate to use the word play. That's what our influencer friends, they use the word run the play. The business model then can be twofold.
Mm.
You could be a business owner, raising capital, take your own company public, or if you have some capital on the side, you need to find these early stage companies and put some money in there.
Mhm.
And so what I call that is now you need to generate your network so you know what part of the network you're sitting on. That way, when you hear a small company saying, I'm looking to raise capital, here's my idea, I have this financial instrument, I can raise capital legally, I've been approved. Now you can see the vision and you can see the exit strategy.
Yeah.
As the business owner, to your point, Kyle, earlier, now you use this money to grow your business. I have so many calls, just like y'all, with people. I can't afford this. I'm still in startup mode. I'm trying to find the money. I just need to sell more. Selling will only get you so far. But
Bootstrapping will only get you so far too.
bootstrapping will only get you so far. But just like an investor told us, when you're raising money, raise it for the 5 years. That way you don't have to think about, worry about money. You can focus on growing your business. Now, they developed for a number of years before they launched, but they raised their first capital in 2013. They
Yeah.
started in 2012.
Right. So people think it's overnight. No, it ain't overnight. But like I said, they've been raising capital. So people think, oh, it's going to, you got to, it's a quick, quick hitter. No, we was raising capital for what, 3 years, 4 years before we went public.
They've been raising capital since 2013, all the way till 2024, and then they IPO'd this year.
Right. And I would say too, just to, make sure we put this in perspective, you know, uh, this is probably a unicorn. You know
Mm-hmm.
what I mean? So, everything is not going to be like that, but still, like Sean said, if somebody comes out at $5, you bought it at 9 cents.
Okay.
You know what I mean? You still, so something coming out like this, it's a unicorn. I could already tell when you started talking about Series A, B, C. Because Sean talks about that in our class. By the time you get to E round, you're a unicorn. If you done raised to the E round, you A, Series B, Series C, and now you're getting a D and E, you're a unicorn. And so by the time you say that, so yeah, that's a unicorn. So it's
Yeah.
going to be $1 billion company.
Yeah. Their Series D, they were valued at 1 billion, 2 billion
Yeah,
in the Series D. They
yeah,
went from
Wow.
440 million to 2 billion in valuation in 1 year.
yeah. And even when you talk about what they raised, what I forgot you said what Series E they raised, what was it, 400 million?
Series
F
E
or F.
was 200 million.
200.
Series D was 50 million.
Okay, yeah.
It's
So yeah,
crazy. And they're not raising money to buy a product or a device or just the month. They're
yeah,
raising product to fund that company.
yeah. It's a technology company, right?
Yep.
Yeah.
Technology. I mean, what is servers and I mean low overhead. I mean, that's brilliant. Plus it's probably all web based.
Ooh, and what I love is Figma reports essentially no debt
Yeah,
and has calculated its total debt to be so negligible that it reports having none. The company achieved profitability despite significant investments in growth and AI capabilities.
Now think about what you just said, and think about Netflix talking about they ain't made no money yet. Netflix got what over 300 million subscribers, and they talking about we ain't made no profit yet. They're
That's
spending
crazy.
$100 million giving people movie deals,
That is
$100 million
crazy.
production deals. Yeah, and they ain't made no money yet.
Let's talk about the market. Figma's IPO represents a turning point in the venture backed IPO market recovery, with 119 offerings year to date, up 45% year over year. The IPO market has seen 120 IPOs priced through July 30th, 2025, a 46% increase from the prior year. So IPOs are alive and well.
Live and kicking.
Yeah, all day long, all day long. Yeah,
Now, of course, one of the things, and what's funny is Adobe tried to buy Figma for 20 billion. The US and UK had some regulatory issues, felt like it was gonna curb competition, so they stopped it. Adobe ended up having to pay $1 billion to get out of it. But they went from being valued at 20 billion to 68 billion. The lessons I want to give for each one of these categories, and you as a listener have to decide where you fit. For founders, number one, long-term vision pays off. Of course, the Phil's 13-year journey from college dropout to a billionaire demonstrates the value of persistence and long-term thinking. Product first approach. They focused on solving real user problems, and then they had strategic patience. For early stage investors, so if you think about being an investor, conviction in non-obvious ideas. Early investors who believe in browser-based design tools when it wasn't obvious achieved 1,000x return.
yeah,
Importance of founder market fit. They cited Phil's authentic connection to design and design community as a key investment thesis, and then the power of platform businesses. Figma's collaborative platform created network effects and high switching costs. For growth stage investors, even in a selective market, companies with a compelling growth story, strong fundamentals, and clear differentiation can achieve premium valuations. The IPO success came as investors showed renewed appetite for profitable, high growth SaaS companies.
mm,
Figma's IPO represents one of the most successful venture backed company journeys in recent history. From a $3 million seed round in 2013 to a $68 billion market cap at IPO close, the company has created extraordinary value for all stakeholders. What are you going to do? What are you going to do?
that's phenomenal.
Because it's possible. People made lots and lots of money off of this. VCs collectively stand to make more than $6 billion, even at conservative estimates.
And looking at the aftermarket is not done.
Yeah, exactly.
It's 143.45 in the aftermarket, $143 in the aftermarket, up $27, 24% in the aftermarket. That means when it opens up tomorrow, it's
Wow.
going to open up at 143.
Yeah,
It closed today at 115. It's going to open at 143.
yeah.
But those people that are buying at 143, they may make some money if it goes up, 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 up. But the people who made the real money bought at 9
9 cents.
cents.
So, so, so think about this. Think about this, because this is what this is going through my head while you were talking. All right, Sean, we're pitching a company, right? And we're selling it for 9 cents. What's that pitch look like? Share with everybody out there. What kind of script would you put together for a company that's pitching at 9 cents? We selling the shares at 9 cents.
Yeah, I mean, that's basement ground floor opportunity, you know?
You're jumping out the basement window.
I mean,
There's
yeah,
no
yeah. Best thing since sliced bread. It's at 9 cents right now. Get in.
right. Get off the porch. Get in the yard with the big dogs.
Get off. Yeah. Like, buddy, calm down. It's only 9 cents.
Right. I mean, come on, grab your, you know, what I mean,
Yeah, yeah,
get into this. I mean, that's the pitch that we would be saying to people. It's at 9 cents.
yeah. I said 9 cents. How far can you fall? It's
Right.
9 cents.
Right.
Ground floor opportunity, basement
Come on.
level.
Look, buy 1,000,000 shares. Go
If you
ahead.
jump out the basement window, how far are you gonna fall? How far are you gonna fall? It's the
Right.
9 cents. Come on, man.
That's the pitch. That's what we would do. We'd be pitching at if we were pitching at 9 cents,
Yeah.
showing right up an incredible script, and we'd be out there pitching. But guess what? We'd be starting them off at 1,000,000. I need you to buy 1,000,000 shares, and then they get down to 100,000. All right, look at that. Psst. All right, what? It's under 10 grand. Come on now, you spend that much at the bar.
Yeah.
You took your family to Disneyland. You spent that much. Come on now, and you ain't getting nothing in return. What would you get? A couple Mickey Mouse hats? Come on now, pick this up.
I love it. I think that just doing the research, going through the backstory, pulling their data and information, and watching, we go to WeFunder and these other places and we look at these startups raising money. There's so many companies raising capital right now that they may have their unicorn IPO story, but then there are so many that won't have the unicorn story, but they're still making great money.
Mm-hmm.
Whether it's $5, whether it's $10, whether they hit pink sheets, wherever they are. For those investors getting in anywhere from 9 cents to 50 cents, you're fueling the growth of a future company, and then everybody is going to benefit and reap the whirlwind.
Yeah.
Kyle said it. Of course, this isn't the everyday story. Every company that goes through is not going to become a unicorn. We know that venture capitalists, they will play the 1 out of 10 game. But geez, if you on the right 1 out of 10.
Yeah. I got a question, because I know people are out there like they're thinking, man, I could just find a company and invest in it. Maybe it might go up to $20, $30. No, there's definitely some strategy into looking at these companies. Like I'm speaking from an investor's point of view. You want to make sure that, yes, even though they're selling the stock at 9 cents, it has sizzle, right? It also have potential contracts, LOIs in place, or something that is going to move the company forward. Don't invest, and I'm not giving advice at all. Like I said, go to a broker for that. But my personal opinion, make sure that it has something going on for itself, not just because it's cheap. You want to buy a whole bunch of it. Hopefully, there's no get rich quick schemes in this, but you gotta at least look at it like these companies have to have something going on for themselves, like LOIs, letter of intents, contracts in place. They're just growing right now. Something in place where you can see the vision, a long-term vision, and you can see a good exit strategy for you. A company can give you a good exit strategy, because just in throwing money around in the markets and stuff, and these smaller companies is not very wise doing it that way. You always got to look for the sizzle and look for something that, with that can expand the capabilities, capabilities to expand rather, So
Yeah,
Yeah,
I was
go for it.
yeah, but I was saying, because I was just thinking, I would really like to maybe do a deep dive delve, probably us on our own, we do our stuff. But you think about it, it came out in 2012. And I'm wondering, that was when the Jobs Act was created. So I'm wondering if some of that could have started during that time. That was jump started.
Something, yeah.
Yeah, if that was one of the things that kind of helped it get on its way, because that was general solicitation. So that's one of the main things that I could see why this. Think about it, if they did a reg, what is that? A reg C506 raise unlimited. You know what I mean? They were able to rock and roll and then roll right into that to a series A, B, C, and D.
Yeah.
The general solicitation. So that's one of the things that could have helped them, really get to where they did to come out at $1 billion.
Mm-hmm.
Yeah. One thing that would have attracted me to them was when Adobe tried to
Yeah,
buy them out for
yeah,
20 billion.
Hmm.
yeah.
That was the time to get like if there was nothing going on in nonsense when Adobe tried to buy them out, that was the time to get in
That was the key.
because you're like, wow, if Adobe sees this company and they're valuing it at least minimum 20 million, 20, excuse me, 20 billion, right? Maybe it's time for me to get in here too, you know?
Yeah, I'm trying to find what regulation I gotta. Of course, AI helped me cheat a little bit. It rules out some and puts it like they might have used a 506B because during that time period, that was the standard. 506C, which
Right,
allows general solicitation, was only adopted on July 10th, 2013.
right.
Um, and then the other regulations, 504, they they were later as a limit to 1 million in 2013, so that
That
wouldn't
was
accommodate it. So
that
they
was
were like, it's like saying 506B, but we don't know that for sure.
right.
Yeah, I'm
That's
thinking
why.
more of a crowdfunding because they went into a regulation A after I remember you saying. So and then they only raised 3 million. It wouldn't be too advisable to do a 506B at
Yeah, that's what I said. I'm thinking it's general solicitation because you
yeah
can raise up to $5 million on a regulation CF. And
yeah
it's 3.6, and it was so low. It was at 9 cents.
yeah.
So so that's why I said just a deep dive of that that we can
Hmm.
do later on, but just for our own research. But I mean, it's just if we're teach people how to get on platforms, regulation CFs, you know what I mean? Man, we're gonna have a ball. You know what I mean?
Yeah.
We're a technology company, but like I said, I'm so glad the light bulb went off. Yeah,
Yeah, I can't find it. It's got to be somewhere. I'll do some deep dive research and then see.
We know they didn't do a 504. Well, they might. When did they change the 504 rule?
yeah. No, I said
It wasn't
2013.
back then, though, was it?
Well, yeah, no, that was 2013. So that means you only could raise $1 million.
$1 million, right? Yeah.
Hmm.
But remember, 9 cents. I mean, 9 cents. Like I said, that's crazy. What was that pitch like? I mean, we were 45 cents. You know what I mean?
Yeah.
9 cents.
Wow.
Okay,
Crazy.
so they didn't use a CF because it was not legal yet in 2013.
Okay.
Yeah, they this also says most likely 506B because they used institutional venture capital firms.
Okay.
All right.
Yeah.
But now a regulation CF
Right.
is
And those,
readily available.
right, exactly. But I'm saying, but I know those VCs back then at that level, those were mom and pop shops that they were using. It was mom and pop shops because they said no broker dealer is going to, you're going to have like a million EBITDA or something like that before they start even looking at you picking
At
them
least
up.
minimum
Yeah, we
for
was
smaller
talking
ones.
to the broker dealer. He was what, five? He was almost like 5, 7 million
Yeah.
that they were looking at. So yeah, I think Greylock Partners is a pretty big name. When they raised from them in 2015, they were 20 cents per share. They raised 14 million at a $77 million valuation.
Yeah. Yeah. There you go. Yeah. So yeah, so they had to use the venture capital, use the small boys to get started, but then that just takes you to the next level. That's the reason why we request 4% of the company. Because think about that. Suppose you got 4% of that company. What's the value of that right now? You own 4%. And guess what? At that 4%, you could drop it in the market and you don't even have to register because you can just drip it. So while that $140 or whatever, we probably would have been
Be
dripping
dripping.
like 5. We'd have been dripping. I don't know what you do with your 1%, but I'm dripping.
Another thing that's interesting, Kyle, you always say this: when you open them up, the investors, you go back to them.
Oh yeah,
As they went through these fundings, the seed round, when it went to Series A, Index Ventures was there. When it went to Series B, it says in existing investors. And so along the way, it keeps saying existing investors or similar names. So those that they opened up with, they stayed on for the ride and they put more money in.
Right. Because think about it. Now this is where you're really doubling up on in the beginning. So you want to talk about some people that really made some money? The people that bought in at 9 cents, now you go back to them and say, hey, look, now you sell to them at 20 cents. So they made money at 9 cents, they made money at 20 cents, they made money at whatever, 24, whatever it is, but they came in 3 or 4 times. Hey, we're going IPO. And they're telling us right now, hey, we're projected to come out at $20 a share. You want to pick up some more of this. Now you came in at 9. I can't get you 9 anymore, but I can get you in at 24 cents.
Yep.
There you go. And they still made a heat load.
Still made it.
Yeah. Yeah.
This was a great breakdown. I think I wish no, it happened when it was supposed to happen for them, but it'd been great if it happened yesterday so we could have talked about it last night in the class.
Right.
But we'll bring it up next week. I'll remember to bring it up and we'll just talk about it then. I'll do the other research, figure out more information around the regulations they use, and we see we can go a little bit deeper in class with our members so we can really hone in on this path because they got active instruments. They can raise capital. They're there. So we want to make sure that they have all of this information and see why this is so important for them.
And I'll be honest, Ty, what I love about it most is that you kind of talked about the timeline. So, like I said, they're hitting the New York Stock Exchange. Everybody thinks this is an overnight success. No, it wasn't an overnight success. It was 13 years, but still, like you said, somebody works for a company for 20 years, or 35 years, or whatever, and retires with a gold watch and a dinner. You know what I mean? But here it is. It says VCs are sitting on 24 billion worth of stock after massive IPO pop.
I read one of the guys had 26, 27 million, 27 million shares.
Yeah.
Crazy.
Yeah, 24 billion. And like I said, I mean, that's crazy. But like I said, even the owners, we said the COO has 20-some million, and it's at
like Evans or something.
It's at $140.
Yeah.
That's the reason why when we share with people and you're putting your structure together for your business, your CEO, your CFO, the COO, how many shares you're breaking down. One thing that we went through, Tyrus, with our company, why we're breaking down so many shares. So just think about how we structured our company, and let's just utilize this as an example. $140 today, and how many shares have we issued out? What would you be worth today if this was Legacy Wealth Capital Group?
We worth a pretty penny.
There you go.
A pretty penny.
Right, there you go. But it took 13 years to get there, but still. And like I said, and if they get acquired, somebody buys them out, they have to buy that individual shares also. That's where the wealth is.
I like it. I want to use, and I'll use, because, I think real life and personal stories, they just matter more than the hype and what people deliver, like the fake promises. So let's talk about that a little bit, because you did say it, Kyle, and I mentioned it earlier, that individuals, let me see how many, because I got a whole bunch of shares in Legacy Wealth Capital Group. Let me put some numbers on there real quick. We're gonna put $115.
4 billion, Tyrus.
I don't even know if your calculator go that high.
Yeah, 4 billion. I've already did the numbers.
Right.
4 billion, 290 million.
Okay, let's play with it. $4 billion. If we rode, let's just say we ride and we go big, take us 10 years, 13 years, 15 years. Well, I spent in the workforce after I got out of the Air Force from 2009, and we could say, let's just say till today, that's what, 2009, 2019 is 10 years, another 15 years. So it's equal. 15 years in the workforce, put 15 years behind a business to go IPO. I probably, just thinking about salaries after taxes and all that stuff, what you take home, the net. Because I'm talking to my good 6-figure job folks out there.
Right.
I'll just do a round average of $150K a year for the last at least 6 years. That's 900,000. And, and then let's say 80, let's say 70 for the other 10. 900,000 plus 700,000. 1.6 million.
Yep.
I made 1.6 million. We'll just call it that. Round numbers, not exact. I made 1.6 million net over the last 15 years.
Mhm.
Working my 9 to 5. That's pretty good.
Right.
But if I can put 15 years and be worth 4 billion, that's a different mindset.
Different mindset, yeah. And I don't think it's going to take us that long, 15 years.
Yeah.
Kyle
Yeah.
definitely be too old.
Yeah, I'm gonna be on the beach. I'm gonna be on the
I know
beach
we accelerating.
Too old,
We're
man.
accelerating.
with a
I'm
drink,
like
a
90.
drink with an umbrella in it. I'm be like, hey, what y'all doing?
I know we're accelerating everything.
Right.
Yeah.
But just people like we have business owners that have owned their business for 20, 30 years.
Yeah.
And then they didn't exit plan. They didn't hire anybody. They call those the family-based businesses. They did $2-3 million a year. They maybe brought home 500K. So let's just say you brought home 500K from your business and you did it for 30 years. $15 million. That's great.
Right.
But what if you had a bigger picture, bigger vision, and some capital?
Right.
30 years, you could be a billionaire.
And then think about this: how many people in class that we talked to said they had a business, they were running it for 20 years, 15 years, or whatever. You know what I mean? And where are you getting at? It's like it was barely. It was kind of like a job. You know what I mean? Matter of fact, it was worse than a job because you wasn't working 40 hours a week. You created your own business, but you actually created a nightmare.
Job.
Yeah.
And we had people that have talked about, are you raising capital? Are you doing anything to raise capital? That's why, we say it time and time again, knowledge is not power. You got to apply it. You got to apply the knowledge. For those of you that are listening today and hearing this, you are getting knowledge, but it don't mean nothing unless you apply it.
Yep.
You got to apply it. You got a business right now. You're out there running, doing it. Are you raising capital? Do you know what it takes to raise capital? Have you been to the Capital Raising Academy? You've got to get the information and the knowledge. And then once you get it, now you have to turn around and surround yourself by other people that can help you grow your business. And that's what's so powerful about this company right here, because 13 years, that's what it shows. That's what it takes. It's phenomenal. Like I said, and then you're a billionaire overnight?
Yeah.
Crazy. And to be honest with you, is what they're doing so hard?
No, that's the thing. AI and development and just the way we're moving in technology, all you have to do is focus on a niche and solve a massive problem and really deliver. And you'll be there. I think what we're working on, I know what we're working on. Somebody told me, I was talking to a guy on the phone and he was like, "You trying to be a mini Warren Buffett?"
Yeah, that's funny.
I'm like, exactly. When I explained it, he was like, "Oh, you trying to be a mini Warren Buffett?"
Mhm.
And you know why he say many, right? Because he can't imagine you being as big as Warren Buffett or even bigger. And that's the limited mindset.
Right. Do you guys know today Mark Zuckerberg just passed Jeff Bezos as the third richest man in the world?
They make it. They. I'm telling you,
Yeah.
they own it.
Now think about it. Everybody thought that, Facebook or whatever was kind of dormant or where they're at. They came out with the goggles and all this other kind of stuff. But what has Mark Zuckerberg been focusing on? All I've been here for the last month or so is that he's working on AI intelligence.
Yeah.
AI intelligence, investing heavily. I've been getting emails or whatever about some type of, it was crazy. I was like, what? And it looked like it was like a headhunter talking about getting into this AI technology, whatever. Mark Zuckerberg, they call him Zuck. That's what Facebook called him, Zuck, is looking for the best AI intelligent people out there.
Oh, he
Crazy.
paying real money too.
Yeah, real
Real
money.
money.
Yep, sucking up everybody. So what does that mean for the
Actually,
company?
because if y'all listening, we off the topic now. Figma,
What
go
did you
look
say?
at them, go learn it, understand that you can IPO. But now I want to go to something else. Now that we're talking about how these guys are growing and paying, everybody want to be a podcaster. This next generation about podcasting, they want to be on YouTube. Well, there is some movement there and as a matter of fact, I want to verify before I say it because I don't want to put it out there if I'm wrong. Yes. Oh, why you gotta be on here? I can't pronounce his first name. He always invest in though. Andreessen Horowitz.
Okay, yeah, yep. He's a VC.
Yep. So he invested in Figma, but he's also looking to build a I hate Business Insider. Now they got me popping up with this ad and I can't even read the article. But he is looking to build a podcasting type network. And I want to say he want to pay somebody $400,000 a year to head that out.
Yeah.
And what he's looking to do is not only build this media company, but acquire other ones. So I'm seeing that, okay, he's about to bring his media company around venture capital, do some roll ups, some acquisitions, and next thing you know, they might have another company going public around this podcasting space.
Yep,
And I bring that up because all these great podcasters I know, they just want to be influencers.
that's it.
Right.
They just want to get on Instagram, show a watch or two, argue about who driving what car. We talked about that last night.
Yeah.
When you have these other people coming in and really taking over and changing the game, they don't care about $10 million. It's like, how can I make this $1 billion venture?
Sean always says that in our class. What's your $1 billion idea?
Yeah,
And he blow people away because they're not thinking like that. Yeah. Somebody came to Figma and said, "What's your $1 billion idea?" They said, "This is it." They said, "All right, you want to get to $1 billion? Let's show you how. This is the blueprint." And
yep.
then
I'm trying to get the article. They just hate me. They want you to pay for all these, and that's how they get you. They send you these little articles that pop up on your phone, and when you click on it, they want you to pay for it.
right.
You got to subscribe. And you guys, didn't you send me something, Kyle, about Newsweek? I think they're trying to go public too.
Yeah. Yeah. So anytime I see something popping up, I'll send it to you guys. Because I said, but we were getting ready to get started with this. So that's why I didn't send Figma. But I had saw it. I said, "Oh my God, look at this. Getting ready to go public." Bam. And I was going to send it out. But yeah. Yeah. Anybody's going to play anything that's happening. It just shows you what the environment that we're in. Unfortunately, most people just think they can't do it.
Yeah,
Yeah, Business Insider killing me. I guess they got that. I can't find the article nowhere else.
And this
But
is
he's
what blows me away. Why all these guys, these athletes, they're billionaires, but they still are not going public. They partnered up with public traded companies, but why aren't they publicly traded?
mm-hmm.
That blows my mind. How are you not around people that are talking like this? How are you not around, folks? And I remember Sean and I was talking to somebody a couple months ago, and the guy he had came with an idea, whatever. He was in the music industry or the entertainment industry, and he was teaching some people, and the executives at the entertainment company said, "What are you doing? Stop teaching them that. Don't. What are you doing? You don't teach them that." He said, "Oh, well, I'm doing it." No, don't teach them that. And he told them, "Stop teaching them that because that's where the real money was at." And he told them, "Stop teaching them that." So, and one of the things that I didn't realize about the entertainment, but being in it for so long, but when you get with those executives, or whatever, they want to control everything.
Yeah,
So you
Mhm.
can't, you can't really do your own thing. You got to sign that project over to them. And if they're going
Yeah.
to fund you or whatever, but they own it. But guess what? They are backed by public traded entities.
yeah. Yeah.
It's another thing that I'm thinking about. Even with Isaac Hayes III, and we see him pushing IG, we see him pushing fan base, or he's pushing on IG fan base, his platform. He's pushing that he's raising capital. But what I don't hear him pushing is his exit strategy. And I asked on one of his posts, when you're telling people invest, 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 we got to own our own, we got to be creative, blah, blah, blah. What is your exit strategy? Is it a plan to IPO?
Mm-hmm.
Because if you're raising capital as fast as he is, it might be a good game to go in and drop some drop some money on some shares there. But what is the end game?
Yeah.
And I don't know why he's not tying that conversation in together, because I think he would pull more investments if he actually shared with this is the windfall that could be possible.
Well, think about that. He's got, and we talked about liquidity. He's got 17,000 investors.
Yeah.
That's his liquidity. So that is the exit strategy. If he hasn't answered it, but that is the exit strategy, because those 17,000 investors are, when it hits the market, those are the shares that'll be going, because he is doing a Reg A. So with him doing a Reg A, that is a mini IPO. Now, whether he does the, test the waters or not, and then pulls it back, or if he feels he can flow with it. But yeah, but that is the exit strategy.
But let me ask you this, or let me say this. For a social media company, 12 million isn't really enough, though, right? Tyrus, you
That's
would
why
know
he's
more
trying to
about
raise
this stuff,
No,
right?
17. Yeah, he's trying
no.
to raise 17.
But 17 isn't enough. I mean, you got how much did Facebook raise? $1 billion?
Shoot.
Yeah.
Yeah, it's a
You know?
long way. This is money just to get your feet wet.
Yeah, that's what I'm
Honestly,
saying.
it's money to get your feet
Social
wet.
media, they require that technology is expensive.
Yeah,
Yeah.
it is.
That raises, he need at least 200 million, you know?
Yeah, just like Figma.
Yeah,
Hundreds of millions.
yeah,
Yeah.
And they have 83% gross margins. But you gotta pay the developers, you gotta pay for the technology, you gotta pay for storage, you gotta pay for all that stuff. And as you grow and as you build and bring more people onto your platform, that's where you start incurring more expenses.
yeah,
And yeah, and to be a competitor with a Facebook, I won't even say with IG, because Meta owns all of that now. To be a competitor, he's gonna need millions and millions of dollars.
yeah, yeah.
Yeah.
Now he might carve out a niche that he wants to stay in that niche, and he gets a comfortable piece and just, that's his market share. Great. Because I was studying that as well. It was like, okay, when you're pitching to investors, you have your total addressable market, but what is the market that you gonna get? And that you
Right.
should, instead of using, oh, it's a $1 billion market. Well, what is the market that you can actually service out of that $1 billion
What's that
market?
percentage? Yeah,
Yeah, and share that number. So that's a little sidebar for y'all business owners who pitch into investors. Stop just throwing out the number, the biggest numbers. Throw out the number that you actually feel like you can address and handle. Your serviceable market. I digress. I digress.
Mhm.
All right. I guess we'll wind down, because I think that we covered enough. I think that for everybody listening, you definitely want to do your research. You know, we come on here every week. I want you guys to actually start to come into our community. I'm going to drop a link in here that you'll be able to go to, because we go deeper and behind the scenes on a lot of these IPOs, and even before the IPOs, just the process of raising capital, growing and scaling your business, what you need in place in order to be successful in that. Because it's not just, you just don't wake up and IPO at 33 and hit 85 and go 140 plus. There's built in work for all of those 13 years that you have to be prepared to do as a business owner, and you have to want it. And so I'm going to go out and say, I even discussed this with my partners. If this isn't something you want, we're probably not the right people to be listening to.
you know,
If you happy with your $15 million over 30 years as a successful business owner, or you happy with your $2-3 million that you might have earned as an employee. Great for you. We're probably not the right fit for you to follow, listen to, because we are on the $1 billion path, and we want everybody around us to be on the $1 billion path. I listened to Russell Brunson today. He said that Tony Robbins, I think it was Tony Robbins. Actually, Kyle, that was you. You weren't Russell Brunson. You was the one last night talking about chicken soup for the soul.
Yeah. Yeah.
So it's funny because you said that last night, but Russell Brunson said something very similar today.
Okay.
And that's what made, but you said it first. Here's a sidebar. Your influencers ain't the only people that know stuff. There's people that know business, know this stuff. Just because they ain't got a million followers don't mean they don't know. They've done it, they've lived it.
Yeah.
Kyle said this thing last night. I heard it again today. Kyle said it first. You got to surround yourself with people who are doing better, thinking bigger, so you can latch on to that and keep going up. If you
Yep.
want to make 100 million, you need to be around people who already made 100 million, because they're talking about the 100 million they're made and the $1 billion that they're going for.
Yeah.
You hang around people, Myron Golden, I heard him say this today too. And more people have said, a lot of people say, if you hang around 9 broke people, you'll be the 10th,
Yep.
both mentally and monetarily. If you want a rich life, whether that's monetarily, spiritually, physically, marital, whatever, you got to hang around people and be around people that live that lifestyle. And so I say all that to say, if you're happy where you are and money ain't everything to you, stay where you at. Be perfectly happy. But we gonna keep the
And you
train
can't eat
going.
money.
Right.
You know, you can't eat money.
Les Brown said, people say money ain't everything, but everybody want to find out for themselves.
Yeah, exactly.
I'd rather have it and not need it than,
Right.
than need it and not have it.
Right. I remember I had a buddy who used to say, "Well, money ain't everything. Give me what you got."
You know, hey, you can't eat money, but you sure need money to buy food. You know, can't eat it, but you sure need it to buy food. You know,
They gonna leave. They gonna leave the podcast and be like, all they talk about is money.
yeah,
You're absolutely right, because yes, money is not everything, but it sure makes a lot of things much more simpler, and
yeah,
we all know that. But just like Myron Golden said, this money is the only thing that people get funny about when you talk about it. When you ask a person how healthy they want to be as healthy as they can be. I want to be as happy as I can be. I want my kids to be the best they can be. I want to be the best I can be. But how much money do you want to make? Oh, I just need enough to be okay.
Right.
Stop limiting yourself. Money is limitless. It's limitless.
yeah,
Don't put a limit on yourself. A tree doesn't grow just as much as it can grow. A tree grows as tall as it can grow, however it was designed. And when you enclose a tree, it will stop. And a lot of you out there are enclosing and you're capturing, and you're putting your own self in a mental prison because somebody else made you feel uncomfortable about talking about money. But when you start being around individuals that are comfortable about money, especially like the other guy told us, oh, it's gonna cost you 30 grand, but that ain't no money. He
yeah,
said it fast. He's like,
Right.
but that ain't no money. To you,
Right.
but I get it. Because once you get to a certain place, you are able to have those conversations. You're able to ask for those $1 billion in raises like a Elon Musk does, and it comes off as normal. So we need to have a normalization of finances. I know what's his name, John Hope Bryant, is now doing the whole financial literacy and and not group economics, but talking about just economics and how important it is for you to be economically sound. Well, I'm not telling everybody they need to own a business, but I don't see another way of having the exponential wealth that these individuals have if you don't have ownership. It's much more than just buying a stock. Sure, you can throw out Warren Buffett name and say how much he make off of Coca-Cola stock, but guess what? He had a whole lot of money when he bought that stock
Mm-hmm.
from
But, but,
owning
but
stuff.
think about this. Like you said, now this is what's crazy, right? So you got somebody that basically you're talking about hiring people and paying them 400,000 a year. Do you know what tax bracket they're going to be in?
The
Half of that
upper.
money is going to taxes. You got 35 to 40% that's going to be paid in taxes. So they're really not making 400,000 a year. That's crazy, right? But if you're going to hire somebody that amount that they're going to make, and you're going in there as a W-2, you're going to be spending 35% of your money back in taxes. That's crazy. And I mean, that just right there is just enough just to be mind boggling. You are not going to get rich or wealthy working for somebody. And it ain't gonna happen. You're not going to become a billionaire working for somebody else. It just ain't going to happen.
The best you can do is jump in a Nvidia. All of them millionaires. But hey,
Real quick, Terry, the owner probably make less taxes than that $400,000 guy.
yeah,
Probably
Warren
pay
Buffett
less
used to talk about
taxes.
that all the time.
Yeah.
Yeah. And I would venture to say even the Nvidia people, we throw them around about high salaries, but it's not that their salaries are that they have high salaries, some of them, but they have ownership in the company.
Exactly.
It's their stock options that make them wealthy. And
Exactly.
so at the end of the day, it's still ownership. So if you are working at a job where you don't have any ownership, you won't be wealthy. And a few deals here and there gonna only get you so far. So again, it's all about where you want to be and how far you want to go and what kind of legacy you want to leave. Because I can probably say for Sean, Kyle, I know for me, we ain't just talking about being billionaires for ourselves. We're talking about being billionaires for the generations that come after us, our
Exactly.
kids and their kids and their
Grandkids,
kids.
grandkids. Yep.
And to be honest, and I know this is some down right down some people alley. This might be a whole nother topic. They do it, they will get you $1 million, $2 million life insurance policy. And when you die, it's generational wealth.
Yep.
Yes, that should be a part of your strategy.
Yep.
But I want to see some of the generational wealth while I'm here.
Exactly. Give me some
I
while
want
I'm
to
here.
see some of it while
Give
I'm
me some
here.
while I'm here. Yeah.
Let me take part in some of it.
Right.
I don't
Right.
want to die and everybody else be rich and I ain't get to see none of it.
Right.
I want to see, I want to get on the boat with Sean, but he ain't driving because we know what happened when he driving.
Right. Right.
We know what happens.
Right. Outstanding.
There we go. Chandler, I am so happy that you joined us and you hung out with us tonight, dropping some excellent comments in the chat. You definitely need to negotiate some shares of something if you're going to be heading up a new division. We talk about that all the time in the
Yep.
class. Um, you guys, we actually sharing that with a client now, bringing people on and that negotiation tactic. So appreciate you all. Kyle, Sean, any last things before we get out of here?
No, like I said, Chandler, hey, I appreciate you hanging in there with us, man. Good job. Thank you. Appreciate you. And hopefully said something that has, sparked you or moved you in the right direction. So outstanding. Appreciate you. And everybody else out there too. But you're the one that's commenting. So that's why I wanted to just acknowledge you.
Yeah, I would like to say, agree 100% with Kyle. Thank you, Chandler, for coming, seeing us today. And my message would be to everybody that's out there: don't let your pockets determine where your company ends up, because just because you don't have that much money, there's investors. The investors' money is limitless to where it won't run out. Now, yeah, you may only make a certain amount of money because you're trying to fund your business, but you get a couple of investors, it could change your whole life around.
Very good. We gave you guys a lot. You might need to go back and listen to this again. Just deep dive in it because, like Kyle said, it made me excited to see the IPO, do the research, and every time I do it, I get a little bit more clarity around, okay, this is how we really do this thing. And it gives me clarity around why, like Sean said, we set up our shares the way we set them up, what that meant, what was the reason for it. And so it all opens up. Every time you look at something new, you do something new. And we got some big things coming. We just want y'all to hang on for the ride because, like Sean said, it won't be 13 years.
Mhm.
We looking to turn this around so we can get out. And it's my first time. Y'all already went public and did this whole rodeo. So it's time for me to go through with y'all. And maybe once y'all off in the sunset, I'll go through it again with somebody else and another group of people that now I'm the OG and they coming up behind me and it's like, oh, you took a company public.
That's
Come
right.
on over here, jump on this board and let's do it again. So
That's right. That's
that's how
exactly
they
right.
do it.
That's exactly right. Yeah.
Good people, have a great one. Be on the lookout to join our community. Our next webinar, April 21st. I know it's a little ways out. We definitely want you to join us on these webinars where we dive deep in how you actually structure your business to be in a position to raise capital like this, in a position to exit and go public, or in a position to acquire or be acquired. So hang out with us, join us. We'll see you all next time.
Real
We
quick,
appreciate you.
real quick.
Yep, go
You
forward.
said April, August 20.
August. I said April, my
Yeah, yeah,
bad.
April, yeah, yeah, August.
August 21st,
Yeah.
2 p.m. Eastern. Kyle, thank you. It's time to go to bed.
That's
Good night, everybody.
good night.
All right, guys.